Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 23rd. Hope you're having a great day so far. We got a few economic news to go over, so we'll jump right into it. As always, every Thursday we get the weekly jobless claims. So last week we had a pretty low number come in at 212,000 people applied for unemployment benefits, which was great because we were starting to see this dip into rise up to like 220, 230 range, and it came down lower. We were expecting rise this week to 217,000, but instead actually dropped 1,000 to 211,000, which is very good news here that we're seeing jobs and a good, very positive aspect of the jobs. Now, however, we go to the market, we got their manufacturing and services indexes, these are the next two, and here is the manufacturing PMI flash for the month of May. So in April, we had a 52.6, and in May, it dipped to 50.6. Now, the concern here is on these indexes, anything above 50 is considered expansion or optimism, and below that is contraction. And as you can see, we're getting very much on the edge of a contraction here, and this will be something that they'll definitely watch. I'll touch on that in a bit as we get into the headlines here, but let's move on here to market services PMI flash. We have a 53 back in April, and it dropped to 50.9, also on the verge of going into contraction area. So we have to kind of watch these. It's a pretty big drop, and obviously we hate to see these go into contraction. Another contracted area is new home sales. We saw an increase to 723 back in March, but however it dropped to 600, or the forecast is come for 670. It did drop, but not quite to that level, to 673,000. These are annualized units. We did see this uptick in March, but however in April we saw it slow down a little bit here. So let's go ahead and take a look here at the headline news as we kind of touched on. Stock market's way down. What's going on is investors are kind of realizing the ramifications that's going on with China and U.S. tensions. That it is looks like it's going to be in for the long haul versus a short tiff, but it looks like it's something that could, as both countries are digging in their heels. Now, obviously, they're looking at different ways. There might be more retaliations from both sides, as we had mentioned. We might raise the tariffs on another 300 billion, 325, I think it is, billion in other products. So basically, streamline it across the board of whatever comes in at 25%. China's pretty much there's not much more they can do, but what they can do is they can unload. They're one of the, I believe they might be the largest supplier holder of our U.S. debt here. They could just kind of dump it on the markets and make the markets not a good thing. Obviously, they could disrupt the markets by dumping our debt, for example. Some of the stuff that's going on here is because of the U.S. blacklisting Hawaii, but even though there's a 90-day reprieve, Hawaii is, if you're not aware, Hawaii, I'm sorry, Hawaii, I'm mispronouncing it here. If you're not aware, they're very, very big, probably maybe the largest technology giant in the China. They make cell phones, they make laptops, a lot of different electronic goods over there. They do get a lot of their business, work a lot with U.S. companies, people like Microsoft with the operating system for the laptops, Google for their Android phones, to Qualcomm and Intel for the microchips and different chips that they buy here. Now, because of that, the blacklist, basically the U.S. is cutting off those supplies. That is a huge deal for them because they are now basically going to be left without any operating systems. Microsoft, they'll have to cut their licensing on their laptops. Google's going to have to cut the licensing on Android-based items from the cell phones or even possibly laptops if they want to go with the like a Chrome type of Google Chrome type of aspect here. And now, not only that, now we got other companies in other countries also kind of doing the same thing. They're cutting off Huawei in compliance with U.S. regulations, U.S. government. So now they're not just dealing with the U.S., but they're dealing with companies in UK and Japan and other countries that were also supplying them, that they're now going to be cutting them off in order to remain in compliance with U.S. government regulations. So they're going to be an uphill battle. Again, this is something that's escalated. There's concern that China might retaliate and basically ban Apple phones in China. So that's another aspect as well that could hurt Apple. That's why their stock has taken a little bit of a beating downwards. So again, these are some things we're seeing more. It's expanding on a global level. It's not just between U.S. and China. It's also affecting other countries, and we may see this continue to escalate. Now, to touch on what I mentioned about the manufacturing, the flash PMI market, basically they came out with a report in Europe, and it showed that further contracting. So that's, and then as a result, they've been having to cut staff as a result of that. So we're seeing some negative aspects, and basically kind of reminding investors about the global economy maybe further slowing down here. And with this spat between the U.S. and China, that's only going to further that slowdown, or maybe even speed up the process a little bit here. So let's see how this is playing out in the bond market. Bond market is up 9 basis points with yesterday's improvement, and then today lenders will be repricing for the better today. So we'll see a little bit of improvement in our mortgage prices or mortgage rates today. So that's obviously a good sign for those who are in the market, either refinancing or buying. Here's the yields. The yields dropped quite a bit. We're down to 2.33 now. Last week our low was 2.37, and we've been kind of hanging around 2.4, 2.42, and it's dropped all the way down to 2.33. That kind of tells you where the market is, and it's kind of helping out mortgage rates here as a result. All right, folks, you have a great rest of your day. Thanks so much for watching, and we will catch you guys tomorrow. Bye-bye.